In this video, we're going to talk about an awesome indicator that you can use to take insanely profitable trades. This indicator is called Trend Trigger Factor. To add it to your chart, you want to go to TradingView, which is the trading platform that I normally use. If you need to sign up, the link for that will be in the video description. Next, you want to load the 5-minute time frame of GBP JPY, but you're not going to be limited to this because this strategy can actually work on any trading security and on any time frame. And then click on indicators and type in Trend Trigger Factor. It's going to beat this one by Lazy Bear. Now, the trend trigger factor, just by looking at its name, you can tell that it's a trend indicator. It serves as a tool to help traders stay aligned with the prevailing trend. Now, before we explore what this indicator is, let's double click on it so we can change some features. On the style tab, you want to disable these two plot options and change color 3 to white. I'm also going to increase the opacity for the plot's background color to 100%. Oh, for the red color, I'm just gonna increase it to about 60% because 100% seems too bright. After that, click OK. So this is our indicator. This white line traversing the indicator window is called the TTF line, and it's used to indicate the trend direction of the market. And then as you can see, we have 3 horizontal lines. This line at the top, which is located at the 100 mark on this indicator scale, is the upper plot. Whenever the TTF line crosses above the upper plot, that indicates that the market is in a strong bullish trend. Conversely, this bottom line, located at the minus 100 mark on this indicator scale, is the lower plot, and it's going to be used as a lower extremity for this indicator's analysis. Whenever the TTF line crosses under the lower plot, that would indicate that the market is in a strong bearish trend. This line in the center is known as the midline. Located at the 0 level on this indicator scale, the midline serves as the central axis point for this indicator's analysis. Whenever the TTF line is above the midline, that indicates the beginning of a bullish trend. Conversely, whenever it goes under the midline, that indicates the beginning of a bearish trend. Now, in order to use this indicator to trade, we need to add one more trading tool to the chart. But before that, let's talk about the Forex broker called HenkoTrade. Now, I've been using HenkoTrade for quite some time. As you can see here, this is my live account. The reason why I think HenkoTrade is a great broker is because of their low commissions as well as spreads that go as low as 0.0 pips. They also have a maximum leverage of 1 to 500. You know, for those of us who love high leverage. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $3,000, well, guess what? They're going to give you a bonus of $3,000, giving you a total of $6,000 to trade with. To access the bonus as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, to add the extra indicator that I mentioned earlier, well, you want to open the indicator search tab and type in volume, and it's going to beat this one by TradingView under the technical section. Double click on it so we can change some settings. On the style tab, you want to activate the volume MA and change its color to white. After that, click OK. So we're going to be using this volume indicator to ensure there is sufficient volume in the market to push the price in the direction of our trades. Now, at this point in time, I know you may be thinking, but how do we take long and short positions using these two indicators that we have here? Well, let me show you. To take a long trade, the first condition is to ensure that the TTF line, basically this white line, crosses above the upper plot to indicate that the market is in a strong bullish trend. Now, to confirm the crossover, you basically take a look at this indicator and you want to see this green color right here. This indicates that the white line actually crossed above the upper level. Condition number 2 is to ensure that the crossover candle, which is this candle that corresponds to this crossover, has enough bullish volume to push the price in the direction of our trade. To confirm that, you just make sure that this last histogram bar of the volume indicator is colored teal, and it should also close above this white moving average. Lastly, as a final confirmation, we want to make sure that the price is breaking and closing above the most recent resistance level. To identify a resistance level, you just take a look at your charts. You identify several swing highs lined up like this. That means that that area is your resistance level. You take your rectangle tool, and the way I usually draw my levels is basically start from the highest point of all the swing highs, and I want to capture all the way to the lowest peak. Extend it to the very first peak, And there you have it. As you can see, the price actually did a break and close above this resistance level. Because of that, we're gonna enter a long position here. The stop loss is gonna go just under the most recent swing low. For the take profit, we're gonna go with a risk-reward ratio of 1 to 2, letting the trade run and take profit. For a better understanding, I'm gonna show you one more long position. So right here, as you can see, the TTF line crossed above the upper plot, indicating a strong bullish trend. To ensure that this is an actual cross above the upper plot, you just take a look at this value right here. As long as it's above 100, that would mean that the TTF line is actually above the upper plot. Condition number 2 is to confirm that the crossover candle has strong enough bullish volume to push the price in the direction of our trade. We take a look at the last histogram bar of the volume indicator, and as you can see, it's colored teal, and it's also above this white moving average. Lastly, we want to ensure that the price did a break and close above the most recent resistance level. This is a swing high, and this is a swing high. We draw from the top of the highest peak to the top of the lowest peak. This is a resistance level, and as you can see, the price has just done a break and close above the resistance level, which means we're going to enter a long position here. Now, to take a short position, we're gonna do the opposite of everything we did for the long positions. So the first condition is to confirm that the TTF line crosses under the lower plot. For that, you just take a look at this indicator, and you either wanna see a red color like this, or you can also take a look at this indicator values. You wanna see this white text indicate something less than -100. Condition number 2 is we want there to be enough bearish volume in the market to push the price in the direction of our trade. For that, we just take a look at this last histogram bar of the volume indicator. We want it to be colored red and to also close above this white moving average. This indicates that this candle has enough bearish volume to push the price in our direction. Lastly, you want to make sure that the price is breaking and closing under the most recent levels of support. So this is a swing low. This is another swing low, this is another one, and this is another one. These swing lows as a whole form a support level. We want to draw it from the bottom of the lowest swing to the bottom of the highest swing. This is our level, and as you can see, the price just happens to be breaking and closing under the level, which means we're going to enter a short position here. The stop loss goes under the most recent swing high. For the take profit, we're going to again target a risk-reward ratio of 1 to 2, letting the trade run and take profit. In summary, the trend trigger factor is a robust trend indicator that allows traders to identify strong bullish and bearish trends. By following our defined conditions for entering long and short positions, traders can capitalize on market movements for super profitable trades. Remember to do extensive backtesting and forward testing of this strategy before trading with your real money. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thank you so much for watching till the end, and I'll see you next time.